Hello investors and traders, today I'll speak about Fangman stock, Fangman Group, Apple, Google, Amazon, Microsoft, etc. So let's start with Apple, Apple stock. Look, here it was a major support level 140, we broke it, and now most probably the nearest target is 100 bucks. By the way, what I'm thinking about Apple, of course, their side, the momentum indicator is 37. They tell us that the stock already oversold, but let's have a look on the P ratio. Now it's 21. It's not cheap at all. At the pandemic lows, it was 12, 13, 14. So I think there is another place when the stock can go down. And also we saw that the demand for the iPad, for the MacBook, the company itself sell this that is decreasing. So I think it's still a very expensive company, and of course it's here this performance, the raising of the stock is due to the buyback. Apple is the biggest company in the American market with the highest buyback. So of course, when you have so a significant buyback, of course it supports the stock price. But now I think it's time to see the stock a little bit lower, and I think there is a possibility to see it lower another 20%. The next stock is Amazon. Let's have a look at the monthly time frame. So here in my mind, using the Elliott wave, it was the first wave, the second, the third. Third is the largest wave in the impulse, and now the correction. Here, by the way, I think its target is 75. The company itself now telling that their staff lay off, that the staff is there are a lot of too much people working in the companies. They don't need no such number of employees. So now Amazon, I think in the nearest months will be in a trouble. So also the target is 75, as I told previously. It's another possibility to see the stock lower about 10%, and then it will be the finishing of the first wave. And then I'm expecting to see Amazon stock is higher. It's higher than the target's about will be about two 200 bucks, and in this case the possibility to grow is more than 100%. By the way, the P ratio now it's not cheap. Of course, it's better than it was 5 years ago. It was 200, 300. Now it's below 100. But anyway, still the P ratio not impressive. So I think now it's not the best and the right time to buy Amazon. The next stock is Google. Google. So what I'm thinking here. So in my mind, the target is it can be the 60 bucks. The advertising market is now tightening after the COVID boom. This one, it was a nice move. We saw Google raising more than 100%, but now the correction from its high level is already more than 40%. So the nearest target is 80 bucks, but a nice level when it will be the perfect price to buy. In my mind is 60 bucks. By the way, the P ratio is now only 17. It's cheaper than the pandemic levels. So but look, 17 it's not cheap, because The average P ratio for S&P 500 now is 15, so it's still more expensive than the whole market. And PS ratio, yeah, but PS ratio, yeah, is okay. It's only 4. It's the lowest PS ratio price per share for the last 7 years. Why? Because we can see that still the net marginality is still continuing to be very expensive. Very impressive. It's about last years. It's steady higher than 20%. So generally, Google is interesting for a stock for me after correction, but I think the perfect range we can consider it. The buying is between 80 to 60 bucks. The next stock is Microsoft. So here, what I'm thinking that we are trading in a decreasing channel. The best level when we can buy the stock is about 200 bucks, and it will be the case when the stock will be lower in 10%. So okay, 20 bucks I think it's great time to buy Microsoft. By the way, the P ratio is now 24. Yeah, it's the pandemic levels. So if we will see lower than 20 P, so I think it will be okay. But the PS ratio in my mind is still relatively high. 8 PS, yeah, it's not cheap. If it will be 5 6, it will be of course better, but don't forget that the net marginality is very impressive for Microsoft. It's last years it's steady 130%. So yeah, it's one of the best stocks in the whole US market, especially Nasdaq in the IT sector. But by the way, the correction in Microsoft now currently is about 35%. Not bad, but I would like to see this stock a little bit lower. And Tesla, let's have a look on Tesla. So here it was decreasing, it was expanding linear diagonal in my mind. It was the first wave, the second, the third, the first, and the fifth. Most probably here the fifth is finished, but there is still possibility to see. Let's have a look on the chart. I think we can see Tesla a little bit lower. In this case, we can see in 50% lower. Why? I will tell you a few reasons. The sales of cars year to year in the US are decreasing. The stock market, the EV market now is very concentrated. There is a lot of companies who producing these EV vehicles, and also the Chinese market is very highly competitive. Pay attention to Li-Auto, to NIO, to BID or BID, how this company which Warren Buffett invested, BID, yeah, BYD. So Tesla now has a lot of competitors, and the Chinese companies, their prices, I think maybe 30-40% cheaper than Tesla. So of course in US Tesla it's hold most of the EV market, but the Chinese market and then European markets, of course there is a very tough competition. So I think Tesla now is in a problem. So I'm not sure that it's time to buy the stock. And by the way, please have a look on the side of meta indicator. Now the stock already oversold, less than 30, and last time we saw this low levels, it was don't even on the pandemic levels. It was 2019, so 4 years ago, but still the market where this company operates, it's highly competitive. So I'm not sure. Look here, 3 years ago, 4 years ago, Tesla was number one. It was the only company, the best company in the market. Now there is a lot of companies. The Ford, the General Motors, it's just the US companies, but there is a lot. There are a lot of Chinese and European new companies who produce these EV cars, and their um, prices is much lower than Tesla. So anyway, it's my opinion about Apple, Amazon, Google. I think that in the first half of this year we can see the indexes a little bit lower, and then closer to the end of this year, maybe it will be the best time and the perfect time to buy Nasdaq stock and IT stocks. But now I prefer buying dividend stocks like AT&T, WBA, Philip Morris. I think that time for buying such companies like Facebook, Amazon, it will be another good time, and during this year to consider buying the stock. So don't forget to subscribe to my channel, press the like button, and see you on the next time. Bye.